Okay, hi there, guys. Hope you can hear me loud and clear. We could probably spend the rest of the afternoon talking the way the markets are lately. Just someone give me a thumbs up if we're coming through okay. Goldfish and Alan, how you going, guys? There's a few more in, and probably a few more coming slowly, bit by bit. I hope we've all got ourselves a coffee and we're sitting down and ready and raring to go. Lawrence, how are you, buddy? All right, so we're right to go. Welcome, guys. Welcome to Trade Setup. It's a live stream for the 25th of the 10th. C Pilot, how you going, mate? Yep, the live stream for the 25th of 10th. Anyone that's new, welcome. And if you listen to this later on, welcome. And look, just as a reminder for the YouTube setups, just remember that if it's coming through a bit blurry, just go to the bottom, I think it was the right-hand corner of your screen. You'll see a little spinning wheel when you hold your mouse over it. On settings, click on that, click on quality and go to 720. I think that's the one, HD. Yep, 720. There you go. And that'll just clean it up if you're having a few issues there. G'day, Helen. Also, oh God, that slipped my mind pretty quick, didn't it? No, that's probably it. Oh, look, don't worry about it. Yeah, if you've got any questions, just remember you can always email support@tradesetup.com.au. And oh, that was it. If you are trying to listen in but you can't get onto the chat, just remember you're going to have an account with Google. So if you've got to log into your Google account, you'll probably find that in the top right-hand corner of Chrome anyway. Log in there, and then you can actually jump on the chat and call me names if you like. if you're that way inclined, but doesn't bother me either way. Um, yeah, like I said, welcome. With the live stream today, a bit to talk about. If you're new, just remember you can join us on Twitter at the top left-hand corner. Anything that pops up, and we're not putting a lot up there late, be much appreciated if you can give it a like, spread the word a bit. Top right, you'll see us at Facebook. Not that we're that active on that Facebook site. The bottom right, subscribe to us at our YouTube channel, so you'll get anything from YouTube once we go live. If you don't see it anywhere else, they should forward you on an alert anyway, so that it's active and ready to go. And we're doing something. Let's minimise that. We've got our general advice warning too there. Sorry. Minimise that. Get into the markets. How is everyone hanging in there today? We're going okay. I'm hoping so. This market is poleaxed down. We're down 130. We're just creeping lower. Um, we were discussing it on the forum today. Let me just thicken that up. Discussing on our forum today, just having a bit of a chat about that. There's times when the market's, it goes into pullback mode, which is a bit more contained. It's a bit more controlled when you see those pullbacks. And it can be times to pick up some bargains if they're looking good. But there's other times when, it's more fear driven. And what do we say? Up by the elevator, down by the escalator. It can come scream down fast, which you can see there. So pretty much you can see in just a couple of weeks, the bulk of that move down from the highs just below 2064 from about 57, just above that little run up there, which took us a good part of April till the highs in August. A few months there, it's done in a couple of weeks. So things can really change pretty quickly, but it's always like we're always talking about, and we have a good chat about this with the guys in the forum. Um, you've got to have an understanding of what's happening globally. There's no good just sitting around watching the micro picture on what's happening in the ASX, what's happening in individual shares, and think you'll be immune to it. There's a lot of times, yeah, that's okay. You pick a good stock and there's a bit of a pullback on the ASX. You pick a good stock, it could still go up. There's going to be other times when you're going to get crucified. I don't like to say that too much, but there's going to be times when the market's in fear mode, like the GFC. It can really get out of hand, and it doesn't matter what you're holding, that can really cop it. So always going to be, not, I wouldn't say fearful, but just on guard and check out what the overall market's doing and have an idea of when there potentially could become a pullback. But I would say, let your levels play out. Don't just try to think, oh, we've reached the top and bail out, because it doesn't mean it's the top. You don't try to pick a top or a bottom on anything. It's always just about trading what you see. Saying all that, this is the ASX here, and you can see it's just touching on that 57 now. It's 3 points below, so 56.97 at the moment on the ASX 200. Where's the XAO? The All Ords, about 58. So, look, I was doing a bit of work last night. I'll show you that in a second. Bit of work last night. I thought, oh, it's time just to go over a few levels and really took a bigger picture view on the ASX and thought, oh, look, we're down in some support zone. If it's going to hold up, it's going to hold up here. And I think it's sort of getting a bit extended down here. And then lo and behold, I wake up in the morning and all that work's gone straight out the window as the market completely, down 600 points in the Dow. So it got smashed last night. And you can see that it's, percentage terms, look, it's pretty good too, decent size. But, you know, back sort of when the GFC was, I guess, or when a long time ago when markets were moving higher, they were coming from a lower level. So in numbers wise, a pullback was a good pullback, 300 points. Now we're looking at 600 points pullback, which could still spook people, I guess, just the sheer size of it. We'll take a look at those charts in just a second, the Dow. But yeah, they got knotted a bit, and you can see the what is it, the Nasdaq, which obviously with all the tech stocks were led the charge higher. It got done I think just over 4.5% down overnight. So yeah, a lot of bailing on shares, and it's not whether it's interesting whether it's just a sheer people who held through that most recent pullback a few weeks ago, have held through that and waiting for it to bounce, just by trying to pick a bottom. They started to edge in a few more, have now been caught because the market's turned around, just headed south again and really cleaned people out. So I think this second time round, this big move has really cleaned out a lot of players. But the US dollar didn't move too much. Bonds were higher, yields were down on safe haven, but not anything. I don't think anything significant what they were previously when they spiked a bit through that 3% mark. So really, I know it's probably a lot of it. So the US dollar rally, even though it wasn't a lot, it's probably more to do with the equity market this time around, as opposed to the equity coming down because of the US dollar rallying along with bonds. It's more sort of fear in the equity market, I think, that dragged the US or pushed the US dollar higher and bonds slightly higher, a bit of safe haven. It didn't touch really gold. Gold rallied the night before, which is interesting because it couldn't really get on with it. So just be careful if you're into gold. I'm not saying it's not going to go higher, but it's not reacting, I don't think, traditionally the same as what it normally does. So obviously the concern over in the US is that where's growth coming from? You've got so many headwinds. Any S&P downside area of interest? Yeah, I'll have a look at that in just a sec. Target. When to buy again. This is the thing. I want to step on that. Step on that and squash it. Now, touch on that in a second because I think it's important trying to steer clear of just looking like, okay, we've got a target here, like on the ASX. Whereas if I was looking to buy just on the support zone on the ASX, probably would have done it yesterday if I noticed it before last night. Looking to buy yesterday, looking for that bounce because markets were extended, but I would have got blown out of the water today. Just overnight. So it's important to watch the price action. And when the markets go down as hard as this, like we said before, don't look for that V-shaped recovery because it's not conducive to anything longer term. They're more just that bounce, and then they can get hammered again. So I mean, yeah, you can pick up some dollars in there, but you can't be a traditional stock buyer. You've got to be more active. You've got to be on your toes a lot more. Um, So yeah, I think the way it's come down quite hard from just below 64 down to 57, nearly 700-point drop in the space of probably a couple of months, from those highs. So that, and this, you can see this little pop up here that would have brought in some bulls, a couple of green candles, and we were talking about that. That's where we're actually, funny enough, we missed a sell. So we missed a hell of a lot on the short side, to be honest. Didn't get into that short. We got whipped out, which is probably stupid. I should have really looked at that a bit harder and re-looked at it again on the short around 62, I think it was 61.50, 62 zone, 61.70, I think it was. Yeah, we didn't miss that one, but there would have been a few people being dragged in there, jumping back in because the trends had a pullback, looking to buy the dips, and then getting blown out of the water. So you've really got to assess what the overall picture is. We'll take a look at that in a second. Just what I think it's important to look for if you're looking to buy, the different scenarios that you could be heading with. We talked about this a while ago. If we go back to the daily, let's just get into it now rather than dilly-dallying around. So this type of price action, when you see this type of price action, sort of grind high, you've got to be, in my view, you've got to be careful. And the reason why I was really um, careful about this one, get rid of that, just draw it up. For anyone that hasn't been listening, I know there's probably reiterating the same thing as we said before to a few of you, but I just want to point out the difference in price action. If you're new to technicals, or if you like your technicals, you probably agree. You get this sort of move down, you get that sudden move down. You know that I generally look at things in twos. If they're going to pull back, especially, if it's just grinds lower, if you get this sort of grind lower, you don't really expect too much. You're expecting it to bounce, and then, okay, that's more bullish type of a move for me, rather than something just falls out of the sky, comes straight down like that. That cleans out a lot of people. It cleaned out a few levels. So anyone that didn't get out, you know that is probably going to be holding it. Either they don't believe it's going down, or they're waiting for, they're not going to sell on that capitulation. They're going to wait for it to bounce back, because you generally see it bounce back um, on that sort of a move, that sharp move down over those few days. Wait for a bit of a bounce back and then sell back into it. So that's why I'm always looking for that second leg, and you get that grind high, and that's a big heads up to be careful if you're going long, to really be careful. This type of grind up, you can see pops up, a couple of days down, a couple of days up, down, up, down. It's really choppy and really just squeezed out at the top above, say 62.1, or 62, say 62.10, whatever it was. Just squeezing out here. I hope you can all see that. It's coming through okay. Yes, you just squeezed out at the top and then start to fall over. And that's what we're looking at there. As soon as you get that sort of, again, you get that sudden move down, in 2 days, we took out good few weeks of work on the ASX there. So you can see we're looking for that secondary move down. Now, that's a hell of a lot bigger than what I actually expected. At this stage, where we're looking at it just coming into around 50, was it 6,000? So that was your sort of first port of call. You could see it fell a bit short here, then boom, straight down. Okay, forget about that. Look for the next level. Next levels really was sort of down around that 58, maybe extension. It looks, this is what it could be, that extension, which it doesn't really look like that now. It's just blasted through those two levels in the one day today. So yeah, you're looking for that, pop up, that secondary move down. You can measure that move down. That took you to around 6,000, but instead, the market's just blown through there. So what we'd be looking for now, I think it's important. You really got to assess. Let's go to a different chart where the levels are. Here we go. That's what I'm looking for. So this is what I was doing last night. I put it on a weekly view. So this is what I was playing around with last night. I thought this looked okay. I thought, we're down sort of there in this 58. We seem to be just not steadying there, but we've had a dip down, a pop up for a couple of days, and we started heading down. I thought if it gets a bit choppy around there, then to me it's a bit of buying stepping into the market, and we were happy. And then drew up this chart here. This is from, this is the GFC when we hit all-time highs. Bang, straight down there, and it's been, steadily heading up. Those corrective moves on the weekly charts, bit of correction there, correction there. It's just whether or not now we're starting to see that correction as well, or whether we're going to hold up. So you're really just trying to look for levels. But before today, we were holding up around 58, and I thought, oh, look, rising support here, good little level. We might get a bounce, and then we'll be looking for either your lower high or, bounce, pull back, build a higher low, and then go again. And all's good again in the world. But instead, woke up in the morning, like I said, down 600 points. So I had to really reassess that. So really the support line to me is gone. I can probably take that off. Remove. Ooh, what did I take off there? Just delete, right? There we go. So this is your weekly now. I still think, I'll go back to the daily. You can see you've got a couple of levels in play. That was that 58 zone, which we pretty much blasted through today, and it's never a good sign when you go in and test and you get your lower high and it just comes straight down. It just falls like a stone. So your next level where we could find some support where you would expect to see potentially a reaction. And if you don't, if you do this similar kind of thing, you blast into the level and start to sort of grind back up again. Like you never want to see that grind back up, edging up, like we just showed, like we're talking about here. You don't really want to see that off a zone. If we get that, really hammers into a zone, falls into a zone, starts to grind back up, you'd be a bit tentative about jumping in. What you what I would be looking for now, if I'm trying to pick out a level where I want to start edging back into the market, is really just looking for the price action that's going to suit, that's going to, I'm better off drawing it. Let me just draw this chart. Whoops. Sorry guys, let me try that again. There we go. So I'm looking for something, if it's going to come into a support zone like that, I would rather give it time, especially the way it's come. It's got absolutely hammered down. So you've always got to question when things like this. I don't know if anyone remembers the GFC. I remember sitting around one day and it was, oh, now what? Who were they? Something financial. Storm. If anyone remembers a company called Storm Financial, now they had some sort of ASX. I can't remember exactly what it was. Um, this is back in the GFC, prior to the GFC. They had all their analysis on there, whatever, and they were just buying the STW, which is the ASX 200 ETF. Buying that, they've done all their data. We wouldn't get much of a correction past, I don't know, 8% or so. It was over the last 20 or 30 years, average 5, 6, 7%. It was going up. So if you just bought into that, you're leveraged up a bit. Away you go. You're gonna any sort of a pullback, you're going to weather the storm, um, as they call it, I guess. But what they're also doing is getting people to potentially leverage up a bit more, gear up a bit more, and get better returns. Obviously, some people are taking it from their house. Yeah. Hopefully you remember what we're talking about, Helen. There was a day. So what they were doing, people were getting obviously leveraged up. You can put cash in, you can put your super in. It was a financial product. What are financial planners or Storm financial planners? Um, put your cash in. But the people are leveraging up. I think they're borrowing against the house. They got a bit, I wouldn't say cocky, but you tend to think when things happen for so long, um, you tend to get complacent. And I think that's what they were basically just got complacent. They thought they'd done the numbers and nothing's foolproof, but I guess it's just a bit like long-term capital. They thought they were foolproof as well. Um, too many smart people, not traders. I think too much trying to use your, how would you say, um, trying to outwit the market. You just can't. So Storm, one particular day when the market was getting crucified a bit, it was during the GFC. It was actually the Dow. It was one night or a couple of days where the Dow's been okay. Our market was doing quite well, but the problem is it had actually backed off quite a bit. And then what you got is all the margin loans that were linked to Storm Financial just got cleaned up. I think ANZ cleaned them up. Macquarie Bank, they cleaned it up as well. So the market was pretty much going sideways up until, I don't know, midday or just in the afternoon. And then we dropped like a stone, the ASX out of the blue, 200 points. It's just them cleaning up, just cutting out positions. They got absolutely walloped. Now, that's that's just something you don't see coming, but there is the potential. The lower this market gets, it's going to squeeze some margin positions. Anyone that's holding margins, if longer term, some bigger margin books, it'd be interesting. But that's where you get in sort of those realms when you get those big pullbacks and the market gets a bit fearful. Things just get cleaned up. People don't care. They cut it, done, and that could really capitulate then. So in saying all that, what you're trying to search for is a zone where you want to buy from, and you don't want to, you just don't want to sit on the bid. I mean, and we've said this quite a few times, you don't want to just say, okay, that's my support zone. Say we're here, and I'm just going to put a bid in there, a bid to buy. And if it gets down there, I get done. I'm a legend. But the problem is, it can do exactly that. You can get down, and it can buy you, everything you've got as it goes straight through that level. And then what happens? Where are you going to have your stop? You've got to have risk in this market. You cannot jump into the market without knowing exactly where your risk is. And by just sitting on the bid, you're basically, like we said, you're saying that you know exactly where it's going to fall short. It's a bit of ego in play there in my book. So I would much rather any day of the week is miss out on something. If it does just go boom straight into 11 and straight up again and continue on from there, I'd rather I'd rather miss it, especially when I'm talking individual stocks. I'd rather miss it and pick some high probability setups at a time like this than risk the fact that you're going to get absolutely whitewashed if you start to see the ASX down here. Not buying the ASX on the bid there, but I mean buying individual stocks, and then the ASX just keeps going through, and you've got 4 or 5 you bought into, and then stop straight out again. I would rather wait for confirmation, because there's going to be times that even if the ASX bounces from here and starts to rally, there's going to be some nice setups on your stocks that you just got to do a bit more work, really. I mean, there's going to be a hell of a lot now that are coming to a zone where potentially a good buying opportunity. There's a lot of heat coming out of this market in the last few weeks, last month or so. So there's going to be opportunity down the track. You just got to do the work to find it, I guess. So what I'd be looking for, I can just take this off. I don't mind. Say we're picking this zone. What was it 58? Sorry, 56.50 thereabouts. This support zone in here. This is our support zone. You'd rather see it drill into that zone, even if it washes out. I don't care, and then react back up again. And then if it does this a bit, then I'd rather see it plow into that zone but get bought up and get the higher low, and then start to. And we call that a retest fail. You might call that a double bottom. And that's when you get the second time round, when it's had a bit of corrective price action, more this than something that's just gone boom, boom, because that there is different to something which corrected back up again, whether it's in 2 legs, 3 legs, or whatever. The second time round, like potentially like this was probably on a larger scale where it sort of ground and went boom straight back in. From there, I would have been looking for a higher low. If I got a higher low and I was short, I'd probably be out. I'll be out. I think we were talking about that because we weren't sure whether this is going to hold up here or not. If you were going to go short, that was back when it was trading around 62. So if we shorted in here, we're looking firstly into this zone to see how it reacted. It did react off there. We might have taken a bit of heat, but then it come crashing down from there. Fine. But if it come back down again and started holding higher levels and building like that, you'd want to be out pretty quick, because that's a good sign of buyers. Buyers are starting to soak up any selling pressure, and that's ideally the kind of structure you want to see before you're going to load the boat, or if you're thinking about loading the boat. If you've been holding cash for a while, which is a good idea, or if you just got out here or got out and you sort of grind up, you just decide to get out of everything, fine. If you're really willing to get back in, I mean, we don't know if this is where it's going to fall short, or if it's going to blast through here and it's going to head down to 54, 5,500. You just don't know, and you don't want to try to second guess it. You really, at times when it comes crashing down, you're happy to be patient and give it more time to play out. Like I said, if you just get this type of reaction where it just goes boom, up straight, and it comes back down, it could just do this, and then you buy on the second time round without finding a high low, it could just go bang straight down, make a lower high, and just continue its way down. Nothing there in that price action has changed. It doesn't mean it's a double bottom. I'm always inclined to see a double bottom when it comes playing into a zone, comes up, corrects. You get a few buyers stepping in there, and if it comes planning again and then falls short, potentially like that, and then if it starts reacting up again, that's a good sign. Especially when it does this 2 legs back up and comes planned back in, it means that buyers are there. Someone else is willing to buy, or you get the majority of people are willing to buy in there and start to edge in. Maybe the aggressive ones first, and maybe they get lucky. Because you don't know if this is just going to plow through. That's why I'm always waiting for this secondary one off a double bottom, off your retest fail, this little higher low, and then buy into that. Like we got, no, I can't find it. It's probably about here. This was probably not the best example on a pullback, but you've got the idea. If you can get this scenario, this is your prime scenario, and this is what I would be. And I think it's worth waiting for if you see something like that off a double bottom, off the retest of that. If that's your zone at 56.50, I'll be waiting for that. And the same applies to really the S&P. Could apply to the Dow. I don't know what levels they're at the moment, but that's ideally what you'd be looking for. As soon as you get that, you've got your retest, you've got the initial, aggressive buyers jumping in here, just buying straight off the zone. Great, let them do that, because they could be wrong. Let them be wrong or let them be right. It doesn't really matter. Then the market comes planned back in. Okay, you might get a few more buyers. So you're starting to show it's signs of it rejects it again. It's signs that there's not just the aggressive ones, but there's a few more ready to jump in. And then it pops up. And then if you get that last sort of ditched effort to push it down, get soaked up again at a higher level, bang. Then you'd be looking at just some really high probability setups on your shares. Does that make sense there, guys? So really, it's about picking a level and watching it, see what happens at that level, see if there's a good reaction off that level. Okay, there wasn't at 58. We were talking about 58 for a while. There wasn't. Okay, forget about it. We'll move on. We never got into anything. Um, we're not feeling any heat. We're just going to potentially find a better zone that's going to be some cheaper stocks to buy, down the track. We just have to be patient. Let's just quickly look at, where are we? Is everyone sort of understanding what I'm looking for, or what I'm talking about, what I'm rambling on about? Um, Dow, for me, you sort of got this zone more down at 24.2, which could be a bit more of a beating, isn't it? It's 400 points down. So this market, I mean, we could edge into that. What do we say? 46, 56. Sorry, where are we? We can edge in that 56.50 zone, and these guys could push down. The Dow could push down to 24, say 20, 24 too. But for me, maybe the Dow. What am I doing? Go to the weekly. All right. What's going on here, Brady boy? So that's your Dow weekly. It's definitely, well, it's in an uptrend, but we've broken it. We've pretty much probably broke it overnight. So really, are we looking at that as a double top? We haven't got a lower high yet. I confirm that as more longer term one leg down. So where we're going to fall short, potentially we could pop down to 24, up to 24.2, I think it was. We can pop down in that zone. And again, you're looking for the same thing, pushing that zone. I would like to see something like that and head back down in there and then find off a higher low again, that sort of pattern. Because if it does this, and instead of going down here, you start to pull back and grind up again, then I'm more inclined to think this is going to be a major lower high, and we might get one leg. And if we get up to say 25.5, you might have your secondary leg down, and that might take you right down to the support zone around 23. So it could take you quite, another 1,000 points lower. So really, it's all about patience at the moment, and just waiting to see what's going to happen. Because okay, this is your long-term up. We're looking like on the Dow we're correcting. We've washed out those highs. We don't know what's going to happen. We don't. I mean, not sounding doomsday, but it could be another GFC, or it could just be retesting this lows at 23, bang around here, and then up she goes again into new all-time highs. If we can get this type of scenario play out, this one here, this is what I like. Well, if we get that playing out, we get that retest. Even if it's down to 24, it might even get all the way down to 23.5 now. We don't know before we bounce back up. You don't really want to see it blast through there. Just head straight south and then punch back up, grind back up, and then look like another major lower high. Then I think we're in for some real wait time. We're just looking at shorts, but we'll see. What do you call it? The S&P, I think, is pretty much the same, isn't it? Yeah. So a same sort of scenario. Whereas this one, the S&P's sort of gone through potentially that 20, 27, just below 27 level. We're probably looking more towards around 26 at the moment, which is only 56 points. It could be done in a night. Could be done tonight. But just be wary. I think there could be a reaction off that 26 zone. Again, just be patient. Really, in the longer term scheme of things, look at this monthly chart. That's just a little bit of a pause. It's still a massive uptrend. There could be still a lot of heat to come out of that. We really haven't seen a correction like this for, well, at all, since basically 2009. So just keep an eye on it, guys. Anyway, that's a good little rant, wasn't it? I think safety first at the moment. Now, sorry, just reading that lost their homes business like Storm. All right, now I'll sort of touch on. There's been a couple that I looked at. I mean, I think who was a Bitwise today on the forum. If you're on, mate, it's good talk, good chat today. Was mentioning days like today. It's worth just keeping an eye on. One, you really do want to, if you're going to get in, you really want the ASX to be finding a base. Okay, but there still might be some shares out there. I'm always scared after going through the GFC. I was a broker back then. Most of the time we spent in the bar at the end of it. You just did not want to answer any calls. It was hard work, and people stopped calling after a while because the market was just heading south so hard. There's just really not much else to do. So you don't want to get caught up in that again. But there's always times when, I guess just before I go on, that's why it's always good to be getting involved in some CFDs because you can short the market, you can hedge if you like, or you can use them as you can take some profit on those. We've been short Wes Farmers for, can't remember now, above 50, 35, somewhere like that. It was up here, 35. I think we got short. So that's been a cracker. And in saying all that, this is the other one that I was looking at, and I don't know why. I can't tell you why I missed out on that. I was basically looking at it through that $8 level. Either just chickened out or forgot to look at it, or just dropped the ball. And you can see what's happening there. So when you get it right, you'll know pretty quickly, and you can see that longer term structure. Even go back a step. Look at this on West Farms. It looks kind of horrible for me. Even on this chart, I mean, this chart is saying to me it could head down to $3 to $4, and it's been smacked and it's only at $7. So just be wary if you do have West Farmers. Look, it's spiked up here, struggled to get higher, had a pullback, had another charge at the highs, couldn't get there, and you can see this just selling, smashed it all the way down to 3. That was coming into 2016, started 2016. Since then, it's been that grind higher, but that downtrend is still not. That's just really a pullback of this move down, probably 50% pullback. So Fibonacci, 50% pullback there, hit 10, come under pressure, and you can see this is the leg up here. If you draw a line across the lows, we broke it through here. You're looking for your lower high in a weekly and then selling to that lower high. It was prime. So this lower high, now if you just take it out as a short-term target from 10 down to say 7.50, $2.50, $6, it could get down to 6 quite easily if it's going to extend down there. So we've got another dollar to go potentially. But either way, if you're short this, that was a cracker. So that was a good opportunity that, yeah, we missed it. Sorry. We did alert it. We just didn't alert for a sell, unfortunately. The others we got, Molly's holding up in at 22.5. It's now 23, so it's been holding up the last few days under the pressure. We'll see if it continues. Lucky enough, RBL was looking not very good a couple of days ago. They've gone into a trading halt, which is good. And I think it doesn't look too bad. So it looks to be matching a bit higher. It's whether or not all this fear and selling pressure, people may just step aside on the open when it reopens and then let it fall. We might get stopped out, but we'll have to see. The week's still looking good, so we're lucky on that one. And then we've got SLR, which 60.5, it's at 59. It's been touching up towards 60 today and yesterday. So it's not. Look, that's sort of weather in the storm as well. I think it's a Goldie. So yeah, the ones we got, under really no pressure, and the shorts working for us. So in saying all that, I just want to go over a couple that could be. Just put in some charts if you want, guys. If there's something you want to look at, just whack them in to the chat. Let's get over here. AST was one. I mean, this has been down for a while, but you can see it's had this push up, a good pullback, wiped out a few lows, and started to build again. Same sort of pullback, started to build again, same sort of pullback. This is potentially, we could be at a zone here where it could start to lift. Look, it might be up against it considering the market at the moment, but the last few days, I mean, it's opened down and pushed up, opened down again, pushed up. This is the one day, and that was probably after a good, strong couple of days up to $1.70. So it had a little pop up to $1.70, and then under the heat of the last few days, it's been holding up quite well. So I think I would say, hesitate to say that there's probably downside risk is not too high, but the upside potential on this could be, just depends what the overall market does. I wouldn't want to jump into it right now. I would rather that the overall market start to find a base, starts finding some buying coming in, stepping in to support it, and then potentially starting to lift, and this one could just pop. But that's something to keep an eye on. That's AusNet. What was the other one? BXB. I still don't mind it. I've never liked the company too much. I don't know, it's just not very fond memories. But you can see this level through here at 9. It washed out 9 and popped straight back up through the lower highs at around 10.50. We've seen it rally at 11.75 and then it's been sold off. So if you go down to the daily, we've seen this 1, 2 legs down, and then this secondary move tried to get down through the lows again. If it was weak, it should have done it. but it didn't. It sort of gapped up. It's been those last couple of days though have been on the ASX have been pretty horrible. So it's finding a bit of selling today and yesterday, but look at it. It's actually not doing too bad. It's holding up and a bit of a spike in volume yesterday. Um, so I think it's worth keeping an eye on. And if you draw this up, let's just take that. Brambles. Just taking it through there. I think it's popped up here. It could be that that base, you know, sort of closed that gap. Well, if I can draw that. Let's draw it cleaner. Like perfection. There we go. Sort of closed the gap there. Well, almost. It's popped back up. So really what I'm looking for now is that pop up to see it can, as long as it holds above that low. Let me try again. That's your low there. That's a rally. I don't mind if it comes back down like this and then starts. I want to see it chop around. If it takes some time, that's fine. As long as it holds, this is your overall. This is your overall high low on the weekly chart. But your daily is just, you know, it's a bit choppy, and then you get a high low on the daily. Then I think it could be a good little opportunity. That's another one that I've not seen some bad signs on. What are the others? It's just Origin we spoke about. That's a basket case at the moment. TLS. Now we were looking for a short on this around here, I think it was. I can't remember. But instead it's popped up. Instead of coming down, it sort of popped up and we cancelled that alert. But then it's come down. Look, that looks like it could be ready to fall over. But don't forget, this is a favourite of dividend traders, and a lot of spookers out there when markets are getting creamed. If you want to buy something for the dividends because the dividends are getting better, the yields are better. I'm not a big believer in that, but you know, like it makes sense, obviously. Um, the one thing I don't like about this, look how hard it's come down. We were shorting it down here. I can't remember where. It's somewhere around here. We were shorting it down to sort of that 350, maybe into three. Anyway, it's this is on your weekly chart, and it's sort of bounced up. It could have some more to go. I mean, it's heavy. Look at that, the weekly buy, and it's pressed it up here. It's really only just a lower high. So drawing this up, this might be one just to keep an eye on the short side if we get any more weakness. Because don't forget, if the fear comes in, people don't care. They'd rather be out and on the safe side than buying something for dividends. Because don't forget, it's going to play with your mind. If you're looking for it, okay, I'll buy it for dividends, it's cheap now. Okay, what if it gets cheaper? The overall ASX starts getting smashed. People are going to be thinking twice about jumping in. You're better off, it's easier just holding off. And if you're going to hold off and anyone's in, there might be some more pressure coming in. So that's ideally what we're looking for. I wouldn't want to buy this, I wouldn't want to short this if the market starts finding a base, but it could be something to look at. So this is your anchor on the weekly, just above or around that 375 zone. That's your anchor to this downtrend. So you've got one here, 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 next one here. That's led to, you know, we've got leg down here, then it pop up, only a small little pop up here. So that's what we're looking at. This is your following your trend down on the weekly. So we've got this leg down here. This is your contraction. You can see that we've got contraction back up and it's broken down. So when we see this on the daily, it stands out a lot better. It's into that overbought. So if this was strong, why is it falling short of that 375 zone? If it was strong, it should be up there. Instead, it's fallen short, I don't know, 50 to 60% retracement of that leg down. They even, I think Telstra even come out and said that they were struggling in the market environment the way it is at the moment with telcos and competition and just other problems they've got. They brought in some buying, I think. I don't know why people started buying it, but it's popped up. And then it's heavy. It's heavy again at a lower level. So to me, that's confirmation that, okay, we've got some downward pressure coming. This is off the weekly. If we go down to the daily, that daily potentially primed as well. So this thing could go quite quickly. So anyone that's been buying it up here, think it was going to rally, because at this stage, it was still holding higher lows. This is your high low here. Yep, this is your high low in here. Another high low in here, pressing up, and then fell apart there. And now we're potentially, this is going to be the squeeze on the buys or the late buys, sort of anyone above that $3 zone that bought it over the last few months, month and a half, last 2 months. could be ready to get squeezed out. And if that's the case, and there's no buyers around to support it, then this thing could head all the way easily back down to 270 to the lows, even take out the lows. You just don't know. Does that make sense to you guys? So that's one, I guess, to keep an eye on. Potentially, it's a bit of a hedge to portfolios or something on the short side. The only thing, like I said, it could be the fact that it's so late. It's been heading down since start of 2015, so 1, 2, 3, nearly 4 years. All right. Any questions there? Anything you want to look at, guys? I don't mind this one, freelancer. That's holding up okay. The stochastics I don't like so much. It had a bit of a pop up to the highs, just above 60, rejected, but a lot of things are going to reject any more buying. If they start to look a bit stretched, they're probably going to reject those levels in the market conditions we're in at the moment. So I don't mind if that pulls back because you look at the weekly. Look at that weekly. Screen snap. Whoops, daisy. So we've got level here, market pressed down, popped up. What it's done, I guess you'd call that your little, I'm not a big fan of Head and Shoulders, but is it getting there? All right, but anyway, I'm just drawing pictures at the moment. So you can see that this low down here, the market's popped up, pulled back, held a higher low here. So this really, to me, is sort of a key level around 65, say. And at the moment, we're holding these higher lows into it. Whether we come back down and we test some levels at 40, I don't know. So I'm ideally just watching this weekly because it's starting to, you can see that it's starting to form a bit of a cup shape. So this thing could just take off. It's probably going to be up against it again. It might be up against it in the market conditions at the moment, but there are some ones, I mean, it's down. It's been down. It's been heading down through 2017, 2016. And potentially we're starting to find some buying support, whether people think it's valuable. It's finding some value down here. Something to keep an eye on. It's only a small one though, 117,000. I think there's a few that are lacking volume lately, unless it's on the way down. Um, what was the other one? There was just one other one to show you. I've gone over it. You goose. Sorry guys, I got rid of it. You get rid of that. I don't know what it is now. Just bear with me a second. We sent out an alert yesterday. Oh, might have to forget it. Actually, it can be in here, isn't it? That's not it. ELO. Oh, ELO. I don't mind this one. Put that back over here. Actually, leave that there. I don't mind. I don't even know my software. So it's had this press up here. It's had a bit of a pullback. Found some buying back at $5, which led it to a little run up through 850. So touched on 850. Got banged down heavily, but then you can see this. If this is weak, it shouldn't really have held up around 6. If you go back to here, you can see it's pressed down to 6, holding lower highs, bang. It should have gone. It did wash it out, then bang, it's up again. So what you've seen is just this little pop up through 650 is showing a bit of confirmation that buyers potentially are in control. It's just a shame that the overall market's getting hammered at the moment. We're down 160. Oh, we bounced back about 15, 20 points. But it's something to keep an eye on. I think we're going to head through, something like this, just a few sideways days. We popped up 675, pull back, maybe hover around, give or take above and below 650. And if we can do that, the longer it can hold around that level, hold up at around 650, just chop around there, the more, I guess, the longer term, more days it takes, then I'm more convinced that if that starts to rise, it could really go on strong. And you get as long as you get a couple of good green candles again. I don't want to see the stochastics up at that overbought level. I'd rather see if it can pull back to 50%, say, because you look at the weekly is sort of hovering around that oversold territory. So, if something's hovering around oversold and it's weak, it shouldn't really be lifting. So potentially it's starting to find the base, maybe off the weekly charts. It might have to spend a bit more time, but it's something just to keep an eye on. Again, it hasn't done a lot. There's enough, well, there's a bit of volume in there, for nibbling. It may not be everyone's cup of tea, but keep an eye on that one too. All right, CSL, let's take a look at it. Any questions before we kick on, guys? I could easily ramble on quite a bit about this. There's not much else to do today at the moment. The CSL, yeah, it's getting a bit hammered at the moment. That weekly, you can see that weekly. I mean, there's no way you can't just expect it to keep continuing all the way up. Touched above 230 bucks, straight back down. So some heat really has come out of that market. Don't mind that it's come back down. It's the selling pressure's been quite heavy. There's two scenarios. If it starts to hold up, and you're looking at your weekly. So we're looking at a zone. If we just draw it up, okay, potentially if this is going to keep coming under fire, you might find that you're going to be looking towards that 170 as a zone where, okay, we're getting stretched down here. We would potentially expect a reaction off that 170 zone. What are we now? Still $7 away. That's not much compared to, I guess it's a few percent down still, but if that's the zone, if it's going to hold up and it's going to show some strength, that's where you'd want to do it. And I probably wouldn't be jumping in just yet. I'd be inclined, especially the market conditions, I'd be inclined to let it get down there and prove it to me. I want to see this market. I want to see it prove it to me, off the higher lows. I want to see rejection of that level. I want to see a reaction at that level. I don't want to see it go down there and then sit on the bin again and just take me out on the way through, and just keep going down. I mean, never try to second guess what the market's doing. Just trade what you see and trade. Stick to your plan, stick to your setups, and wait until you see it. If you don't see it, move on. Move on to something else. Um, Easier said than done. But anyway, that's just looking at that weekly. That's what I'll be looking for. Overextended up here. Okay, kicked up. We've had heat come out of that all the way back down to sort of that overbought territory. Oversold territory. Selling's come in. It's taken some heat out of the market. So really, it's going down to that daily, and nothing looks like it's falling. It's not holding up just yet. We've got that 170. So if we can look at that, it's coming down prime. You can see the stochastics here in that oversold. Weekly's approaching that oversold. We've got a zone here, potentially around 170. So, whoops, that's not what I wanted. So this is where we want to see the action play out, around 170, above and below, potentially. It doesn't have to be hard and fast. It doesn't have to touch there. It can fall short. It can go through and then pull back and touch it on a higher low. I don't care. As long as it's around that zone, it's not a zone where anyone's going to be triggered to get out, of a long position, because there's no real stops. The stops will probably be, if there's going to be any, below this level. It's taken out a lot. If you're holding a stop below here, you probably should have been out already if you bought it, or if you, it's just anyway. I'm just thoughts going through my head, craziness. Yeah, so if it's going to press into that zone again, you're waiting to see it press into a zone. Like I said, if it goes, doesn't matter if it falls short and you start to get it to lift. Let's try this another scenario. Oh, doesn't matter if it comes straight off, but again, if we can get this pop down, high lows, that would be great. If it does it and moves through, does the same sort of thing, okay, so be it. If it does that, great. It doesn't really matter as long as it's starting to react. The longer the better, because the longer means it's just going to soak up any of that selling pressure. You want to see it soak up. You want to see some high lows. You want to see it try to bust through. And if it doesn't, then if it doesn't, it's just evidence that potentially buyers are starting to step in. And I'd rather give up a few bucks to get on the right side of the market than, try to be greedy and save a couple of bucks and get on the wrong side of the market when it just sort of pops up and goes straight back down again. So I wouldn't particularly want to buy it through a pop like that. I think that's a bit of a tough call, because especially if it hasn't broken any anchor. It's a different story if it's broken an anchor. And by that I mean potentially at 195. mean, if this thing can get through the anchor and then pull back and build a higher low, that's the scenario you don't mind seeing. If we get this, okay, then it's coming off a level. Say this is your anchor up here. Just change colors, right? So the market's heading south. That's your anchor. Say if it pops up here, it breaks the anchor. I wouldn't buy it there, but that's not a bad sign. Then if you start getting something like this, great, because then you're going to get your high low. Or if we just purely come down and then go straight back up again after we've broken through that anchor, okay, you can buy it on the push higher because it's broken an anchor, it's broken a key level, and buy it on the rally. You know where your stop's going to be, you know where your risk is. You might have to give up a few bucks, but you're generally going to be on the right side of the market. High probability of being on the right side of the market than the wrong. All right, does that make sense there, guys? Any questions? Anything you want to throw at me? Apart from just going to have some more coffee while I'm waiting. Let's take a look at Aussie gold. Is anyone into gold at the moment? Get away. All right. So that's the weekly chart. I mean, that pressure to me is on the upside. Let's make this chart. How do I get back? Just trying to figure out how to put it back into a candle. I'll do it here. Uh, oh, I did it on my phone. I was playing around last night on my iPad. I don't remember how to get up to candle. It's going to be obvious. It's going to be somewhere right. Here we go. Hello, candles, candles. There, done. Yeah, the pressure's to the upside here, and you can see it's probably just it could just be going to be stuck in this channel on the way up, but veering, longer term. I mean, it could easily pull all the way back down again, find a base, and go again, depending on the US dollar. Get a bit choppy, but longer term, it looks like Aussie gold's heading high. You're going to find potentially some resistance up at 1838. One thing I will say, I just thought about it. Let's see what data was. That not right? That's probably a support base there. One thing I say, this is not super strong, so that's why it's not. I mean, I know some of the gold stocks are going up. They're not rip roaring going up, which is not the best of signs. I mean, Aussie gold's going up. If you're short term trader, yeah, probably pretty good. But it is even on if you go out to the daily, the weekly's getting a bit stretched up here because you can see the bulk of that action's been sideways. The MAs are sideways. They're starting to lift, but either way, if they start to lift, there's probably a pullbacks on the cards first. It may get all the way back up to 1791, but I would expect somewhere it might react off this zone pretty much where it is 1757. You can see this zone up here might react off here, which means that it's probably going to be a bit stretched at the moment. So just be careful. And this, what's to say this is not going to be a lower high? You get some more lower highs, then breaks out this channel to the downside. Who knows? It's a bit stretched up here. You can see on the stochastic. So yeah, just bear all that in mind if you're trading gold. Gold. If you look at US gold, that's not very bullish to me. To be honest, it's still chopping around between these. I don't think we talked about it for a while. I was getting a bit bearish on that, and it's actually dropped off. But that's your weekly now. Probably wasn't. It was around this zone, I think. Probably way off the cards. There we go. Oh no, it was there. It's actually popped up, so got that wrong. But anyway, just dropping gold down to a weekly. Yeah, it could be a good time. It just depends where you put all your support, resistance, and all that sort of stuff. Longer term picture, maybe that's just a clean out. Maybe that's a strong resistance zone. I mean, it's miles away. Maybe we're going to pop up, build a lower high, and then head south. I mean, who knows at the moment? Even gold is ticking higher on the weekly. Go to the daily. Yeah, that's took a bit of a breather, bit of consolidation through here. This thing could it could extend a lot higher. Just keep an eye on gold, to be honest. I haven't really looked at this for a while. It is extended up here. You can see it's stretched. So asking it to go to kick on, I guess last time it was stretched, it rallied from here, rallied another 13.21 up to 13.58. So it's only $30. So it could kick up to, I don't know, 13.60 in this one move, but we'll see. If that's the case, then you would expect, and the US, say the US dollar keeps edging higher, Aussie goes down, that could give us a really good kick. So it's worth keeping an eye on gold for sure, even if it is stretched up here. All right, QBE. We'll finish up on this one actually. Laurent, QBE. Oh, you had some ones to show me, Laurent. I forgot. Looking at, yeah, look, I'd say looking at the monthly charts could be a hell of a long term. Don't like to be a stick in the mud. That monthly is lifting, but whether or not, we're getting extended on the weekly, this is going to high in the weekly, we head back down to this zone at 925 support. The daily's been bouncing around that overbought zone for a while. I mean, this could just continue to tick higher, but you're probably asking a lot of it in the overall conditions. Just looking at that, looking at the weeklies and the monthlies, um, potentially it's going to hold up above $10. So if you do buy it, you might take some heat, I would expect. But from here, sooner or later, I just want to see a high low build on the weekly. But I don't think it's going to build when it's running out of steam at lower levels. Okay, so the important thing to take note of is that we've got a level up here. So we've got a good level up here too. So sellers are still coming in. I know you've got this big zone. I can't remember, it was about 9, so that's around through here. You got a zone where it keeps, we'll just go back to the month, sorry, just go back to the monthly. You can see it's, okay, it's around 10, 950 to 10. It's traded down there, popped up, traded down there, got through it, popped up, got through it again, backed off a bit, got down there again, backing off again. But it's still, with these lower highs you've got, it's still coming into play. You've still got sellers. There's still potentially a lot of sellers out there that need to get out, that need to be cleared, that need to be absorbed before I'd be willing to get in personally. Does that make sense? So there's still, and you don't know, what we're seeing at the moment is that the market's pressed up. It's in overbought territory. So this move up by the buyers, they're trying to push it in. The sellers are, not waiting to get us up to 13. They're coming in early. They want out. It's as simple as that. And the same thing sort of happened up here when it got to overextended. It was at higher level. They weren't going to wait till it got to 1450. They're coming in early here, come down. They come in a few here. It's come back up. And they're coming in early again. They're not waiting till it gets back up there. So there's still some selling pressure out there. It is getting absorbed around 10, 950 to 10, but don't bank on that holding up. You know what I mean? So you don't really want to bank. There's nothing to say if this selling keeps continuing and you don't know who, what, where. If it continues, that could eventually just break because there's probably going to be a lot of fuel in the way of stops below that level. Or if it does break there, it's going to get cleaned out. You don't know. It might get washed out. You just got to wait and see what happens. So that's why I'm always really looking for. I'd like to see a harder move up. I'd like to see an anchor broken. I mean, I'd rather have seen this move get up to 13 because that's just a sign of strength when it gets back up to that recent selling zone. When it gets up there, if it does straight up from here rather than, it's in oversold territory, sorry, overbought territory. If it was up here, but price was right up at 13, that's a different scenario. But it's not at the moment. It's like you're looking at the stochastics saying, okay, that's the buying. When we get buying from going from oversold to overbought up here, when you get stretched, that's basically saying there's a certain amount of buyers willing to push it up. Now, when selling comes in and knocks it down earlier, that's not a very good sign of buying strength. But if this was up here at $13, by the time we hit overbought, that's a sign that there's less sellers in the way. and buyers are dragging it up, dragging it up. Does that make sense? So that's a better sign, but we didn't get that. So at the moment, I'll still just leave this. I would potentially just let it go. It could break down here and then watch to how it reacts down towards 10 again. It could come down and then buyers just soak it up. You know, you might come back down on stochastics, boom, straight down to overbought, sorry, oversold, but it's at a higher level than 10. Okay, then you probably want to, you know, then you might be taking a better look at it. But just for now, even though this monthly, okay, this is looking good. It's a long, don't forget, each candle's a month, so you've got a lot of time up your sleeve. This is going to play out and start to rally. The weekly is overextended up here, so okay, keep away from it from a weekly basis. The daily is sort of oscillating between, you know, 50% overbought, so it's grinding higher. But that last couple of days, it's been some heavy selling. This reaction lower is quite heavy. Um, you know, the last probably reactions lower off those highs at around 1180, 1170. They're reacted down quite well. So that's a sign that okay, it gets too high, sellers are jumping back in, unloading. So just be wary of it. Hope that makes sense there, guys. Any questions? Because we'll probably finish it up there. I mean, people are walking past the window just looking at me strangely. This guy's talking to himself. All right, any questions there, guys? If not, we'll call it a day. I hope you enjoyed that. And just remember to be much appreciated if you can give the video a like, or if you're into any social media, give us a like. Give us a heads up. A thumbs up, isn't it? Not a heads up. Give us a thumbs up. Much appreciated. And if I don't speak to any of you before the weekend, have a great weekend. Enjoy yourselves, and we'll see what the next couple of nights bring us in the US. See if we can hold up. See if the ASX can hold up anyway. Just be wary too, just before I forget, the way that the ASX has come down, just it could be a savage reversal. So don't chase it in by any means, but you know, the way it's getting overcooked on the downside down here, it doesn't mean it can't keep going, but it can also mean it could sharply reverse. Just be careful not to chase that either, thinking it's all over, because things like they can chase and they can hit a lower high and then, you know, drag people back into the market to squeeze them back out on the way down. All right, guys. Thanks very much for joining us. Have a great weekend. Have a good couple of days. Stay safe, both in the markets and out. And we'll speak to you again on Monday. Cheers, guys. Bye.